Inflation is pretty simple to understand. At the same time, it's crazy complicated. We've shortly said it's a general increase in prices and fall in the purchasing value of money. Okay, let's see what happened last time. In 2008, the world's leading economies were forced to save their financial systems from collapse, bailing out banks and other financial institutions with rescue packages worth trillions of US dollars. These packages consisted almost entirely of freshly printed money, created literally out of thin air. With the enormous increase in money supply, it was feared that the situation would resurrect the 1970s boogeyman, the inflation. After 2009, prices didn't rise significantly. However, governments decided that austerity should be the next step, and it became fashionable and widely adopted across the world. But what exactly is austerity? That's a set of political economic policies that aim to reduce government budgets deficits through spending cuts, tax increases, or a combination of both. These austerity measures, designed primarily to compensate for the increase in money supply, brought a decade of sluggish economic growth. The real income of large segments of the population stagnated or even decreased. But what about now? What caused the inflation? Well, let's blame the pandemic. As COVID-19 spread over the world in the spring of 2020, factories around the world shut down. People stopped going out to restaurants as they were closed by local governments. Airlines grounded flights. Millions of people were laid off as businesses disappeared practically overnight. The employment rate in America shot up to nearly 15% from about 3.5% in February 2020. It was the sharpest economic contraction on record. So let's fast forward to 2021. The leading monetary and fiscal authorities decided that this time around austerity would not be the way forward. Instead, governments across the world did the opposite. In order to stimulate spending, they created massive stimulus programs, paying the wages of laid-off workers and even sending gift checks to families. This resulted in a boom in consumption, which combined with supply chain issues that prevented the normal distribution of goods, triggered an escalation in consumer prices. Nevertheless, the main central banks and governments all agreed that the stimulus must be kept in place, despite the obvious signs of rising consumer prices since April 2021. This is because there is no political appetite for austerity, as authorities fear that another prolonged period of slow growth might occur, or even worse, recession. Thank you for watching, and until next time, cheers!